Hey guys, welcome back. This is Stock Brock. My name is Brock. Today I'm going to be breaking down Airbnb's earnings. If this is an opportunity here, and kind of dive into it real quick. So Airbnb is down about 9% since its earnings came out on August 6th after close. It's trading at a 28.78 PE ratio, and right before earnings we were at about 130, and now we're down to 118.30. So down quite a bit. Let's dive into if this is an opportunity here or not. So revenue did grow 13% year over year, ahead of estimates. Revenue at $3.1 billion. Net income was at $642 million, up 16%, and they have stable margins at 21%. Bookings 134 million, nights and experiences up 7% year over year. And growing free cash flow did drop 7%, so that was a little negative for the company. Adjusted EBITDA was $1 billion, up 17% year over year. And strong free cash flow, but as mentioned, it did go in decline a bit. So stock reaction, despite the beat, shares were down about 6% after Airbnb warned of slower growth for the rest of 2025. So I think the concern is the rise in costs that consumers are expected to pay with tariffs, and the spending that consumers are expected to decrease their spending with the worried economy, slowing growth, interest rates still high, so people are still borrowing at higher costs, and that gives them less spending power. So it's all a big cycle. Think of the economy as a big cycle. So once you start to see the earnings slowing and jobs slowing, this is when they want to cut rates, because they want people to spend more money, keep that cycle going. The CEO guidance for Airbnb expects half of 2025 to bring in slower revenue and compress margins, mainly due to tough comparisons from last year's international travel surge and more investment in new business lines. So they're really trying to innovate the company and grow, so they're going to be spending more and making less money. So maybe not the best idea for a company to try to grow in this time period, is my point of view. I don't personally own this stock, but just kind of reading through it, this is what I kind of grabbed from it. After earnings, Airbnb trades around 118, so about that 7% drop as mentioned. But now it's around 9% drop since earnings. Stock price trades around 118, of course, and had highs and down from its 52-week high of $164. Valuation market cap sits at $74 billion, about 11% lower than a year ago. Opportunities: international growth. Asia and Latin America is an opportunity. Still have robust travel demand. Airbnb for hotels. Management is doubling down on integrating hotels as listings grow tighter in some cities. New features, AI-driven booking, and everything app vision, as mentioned in the previous earnings, could attract a broader customer base. I believe that was mentioned in this earnings call, but I haven't listened to it quite yet. I just took some notes from the 10K. And so they did share repurchase, $1 billion buyback completed, and $6 billion new buybacks announced. Shows management confidence in the business. So that's a good sign. There are the risks and the challenges for this company. A slower growth ahead. Q3 guidance is for revenue between $4 billion and $4.1 billion, matching but not beating expectations, pointing to cooling momentum. Regulatory headwinds. Many cities do continue to tighten rules on Airbnbs and short-term rentals, lowering the percentage of listings in major metro areas and capping potential growth. So that's always been a struggle for a company like Airbnb to grow, especially if cities don't want them around. Little tough. Competition, hotels and rival rental platforms are upping their game. So there's quite a bit of competition, and those regulations a little concerning. Probably why I don't own this stock. But in margin compression, New initiatives in tech and compliance, AI regulations, AI and regulations may mean higher costs and lower near-term margins. And especially if they're upping their spending and their innovation in the company, could be a concern. Valuation questions as well. Some analysts have cut price targets but remain positive. Jefferies trimmed recently from 165 to 160, but maintain their rating of a buy. Is Airbnb a good value here? The current price at 118, market cap of 74 billion as mentioned. Growth versus price, double-digit top-line growth and solid profits. But investors worry if near-term headwinds justify a lower valuation. So this stock can definitely go down a lot more. Long-term story, reinvestment in platform, international expansion may pay off for long-term holders, but short-term volatility is likely and most likely going to come, but we can't predict. Analyst consensus still seen as a quality growth stock, but not the high-flying passive income play it was pre-2020s. Forecasts suggest upside potential of 35% higher by 2026 if execution stays solid. So they did exceed expectations, but issued cautious guidance for quarter two, sending shares down. Growth opportunities remain, especially globally and through new innovations with their new platform ideas. But increased regulation, competition, and softer margins are a bit concerned for the company and a real risk. And probably why I don't own this stock. But the current valuation may offer long-term upside if Airbnb executes. But near-term volatility is likely. Thanks for watching. Peace out.